Australia's banking sector is bracing for a surge in rapid refinancing in 2025, but can lenders keep up with the risks? Joining me in the studio is Corey Smith, Senior Decisioning, Risk and Analytics Expert at FICO. Great to have you here in the studio, Corey.
Thanks very much. Really good to be here.
Why 2025? What's going on?
So look, as you're aware, Australians are facing significant cost of living pressure at the moment. You know, we've come off the back of 2 years or 18 months of consecutive rate increases. So 13 rate increases across 2022, 2023. It's putting a lot of pressure on now. Obviously the cutting cycle has just begun. We've had the first rate cut in February, possibly one in April. And as the cutting cycle continues to gain momentum, more and more Australians are going to be looking to refinance what is ultimately probably the biggest expense that they have on a monthly basis, which is their mortgage. And as those mortgage applications come through thick and fast to the banks, it's going to put them under a lot of operational pressure to turn them around quickly, with whilst maintaining compliance and ensuring that they process them accurately.
Of course, the challenge is the RBA isn't giving us much hope either way. We have no idea what's going to happen, right? You look at America, where the Fed was talking about 4 rate cuts, now it's down to 2 by the end of the year, and we just don't know because the economy is changing so quickly. Then there's the R word, the concern about recession as well. So when it comes to refinancing, you talk about how it has to be done accurately, but there's a real flood in the system, right, if everybody's doing it at once.
You know, absolutely. Look, rapid refinance, we've seen this happen before. The last time the cutting cycle went through, we saw in excess of 250,000 refinance application on the eastern seaboard alone in a single year, and that was a record at that point in time, and we think that that's going to happen again. In fact, there was a recent financial survey completed by a company, Mozo. They identified that of the 1,000 Australians that were interviewed, 49% of them, so basically half of them, are indicating that they're going to be looking for a refinance application as the rates start to come down. That's going to put a lot of pressure on the banks. And the banks, as I said, are going to need to have all the right systems and controls in place to ensure that they eliminate any risk and turn those loans around quickly. Yeah,
because as things accelerate, I would imagine the risks get quite high. Obviously, you think about bank investors there as well, and most of our super is somehow attached to a bank too. But we expect the banking sector to be really secure in this country, don't we? And to see it at a point where, as you say, it's going to come under a lot of pressure in 2025.
Yeah, that's right. We do expect it to be secure, but what we do see, and the reality of fast-paced banking, is that there are risks are there. So consumers ultimately, they still need to put through truthful applications. And one of the things that we're seeing, you'll see this in the news recently, is this concept of liar loans. And what we're seeing is that consumers, and there's a recent FICO survey completed, where a significant proportion, particularly of Gen Z respondents, indicated that they're comfortable exaggerating their income in a mortgage application. And that's really concerning. And as you can imagine, if these incomes are exaggerated, that puts pressure on the banks and could cause, if they don't detect that, rise in delinquencies, which increases capital overlay requirements and also risk of compliance or regulatory breaches. But it's also a risk to the consumers. If they exaggerate their income, they may get the loan that they're looking for, but they may also inadvertently put themselves under financial difficulty. So that's a real risk, and so the banks need to have the right software, decisioning, analytics, all lined up to ensure that they can process these loans at a scalable way, accurately, compliantly, and make sure they protect the bank and their shareholders' interest, but also the consumer's best interest.
So not only are we talking about a refinancing rush, we're talking about essentially first-party fraud. What can the banks be doing to try and keep this on the straight path?
You're absolutely right. That is a risk. Look, the banks have a lot of tools at their disposal. The technology is there, and the technology is available for banks to ensure that they have smart, accurate decisioning, that they use AI and machine learning to detect whether it be first-party fraud, whether it be pricing the mortgages appropriately. And we've seen use cases of this across the banks. Some of them do it very well. Some of them have got work to do, but certainly one of the things that we've identified that could be done more and could be done better by the banks is using AI and machine learning techniques to delve right into the transactions of the customer. So whether that be transactions from a customer that they already have who's refinancing, or uploaded transaction data from a customer who's coming from another bank, analysing that at scale to identify not only the truthful income and expenses, but really delve into the nuance of those transactions and identify potentially other risk indicators. And if they can increase the accuracy of those calculations, increase the accuracy of risk, credit risk for that consumer, not only will they onboard better loans for the bank and their shareholders, but they'll also ensure that they protect the customer and make sure they're compliant to their regulatory and compliance obligations.
Is AI at the point that it's ready to be used in this way for the banking sector?
Absolutely. We've seen many use cases where this is successfully running today for a couple of the big banks, but there's still more work to be done, and a lot of the lenders are really only scratching the surface around what they could be doing using this technology.
Corey Smith, really appreciate your time here at Ticker today. Thank you.
Thank you.